So the tech sector has been on a huge run lately, but I want to take a look at the top stocks that are going to be coming in the next sector when tech starts to break down. Now, there was this post put out by Bespoke Invest, and it was saying how the sector relative strength charts, tech is up, everything else is down, and this won't last forever. So when it does start to come down, what sector is going to grow next? What sector is going to be taking that money? Where are we going to see the rotation happening? Well, I believe we could see that in the consumer defensive sector. Now, there are other people who would call this the staples sector, so the name may be a little bit different, but you can already see this rotation happening today. Stocks like Nvidia, Microsoft, Oracle, Palantir, Palo Alto Networks. Lots of stocks that have had absolutely giant runs are starting to pull back in. And where is money going to? How about the consumer defensive sector? Exactly what we're talking about. So, looking inside of OVTLYR, we haven't had the bullish crossover just yet on this sector, and we haven't had the bearish crossover yet on technology stocks. In fact, we still have an overall bullish breadth in the market of the 9,000 stocks that we cover, but I would not be surprised to see the tech sector and the staples start to twist, if you want to think about it that way, start to rotate from one to the other. Now, when I took a look at which sectors were really performing today, the consumer defensive was up near the top. Now, anytime staples, aka defensive, and utilities start to pick up, that is a bad sign for the market. These are your defensive plays, and it was called consumer defensive for a reason. These are the defensive plays. When things stop working in the big high-flying tech stocks, where does money go to? Utilities, consumer defensive / staples. So going into here, we actually have, if you can believe it, we actually have one red candle on the S&P 500 today. And that one red candle prompted this whole sector to start to pop off. And interestingly enough, which industry in this sector is starting to pop? Discount stores. Are you telling me with one red candle, people are already doing the flight to safety of we need to start buying into discount stores because people are going to go broke, and so they need to shop at things like Walmart, Dollar Tree, and Ollie's Bargain Outlet? Yep, that's what I'm saying. One red candle already sparked these three stocks to start popping off today. So let's take a look at them. Well, first, Walmart has been on a big, ugly, nasty downtrend for a hot minute with that sell signal in place as of May 22nd, and it's been falling and falling. But even though Walmart hasn't been looking so great lately, this may be the start of the reversal. Now, I tell you all the time, don't buy the dip because you don't know how far it's going to dip. You do want to buy the rip for the exact same logic of you don't know how high it's going to rip. If you're going to add Walmart to your watch list, here's what I would recommend. Using the 10, the 20, and the 50-day moving averages. When the 10 crosses over the 20 and price crosses over the 50, that is categorically a bullish trend. If the bullish trend is happening, that is where you want to get in. You don't want to get in as it's losing its steam right here. So take a look at Walmart, put this on your watch list, and wait for the buy signal to come through and the trend to start to reverse, because these are the top stocks right now in this industry, in this sector, that absolutely I think is where people are going to be putting their money. Because if we had one single itty bitty red candle on the market, they're already flying over these stocks. How about Dollar Tree? Dollar Tree actually got a buy signal a couple days ago. Now, with Dollar Tree, DLTR, with Dollar Tree, you've already had the dip stop dipping, right? Here's a perfect example, right? You don't want to be buying this dip because you don't know how far it's going to dip. It was $122 and went all the way down to 86. We're talking a 40% decrease in price right here, right? 40%, give or take, 30%, give or take, decrease in price. You don't want that. You want to be on the opposite side when it's starting to run. Now, there is a little outlier block that it's created right here, but a young outlier block like this, I don't worry too much about. Now, what do these represent? These are areas of stuck buyers, okay? The buyers who bought in on Dollar Tree on February 20th are stuck here because the price went down. How much did the price go down? By the way, tell me outlier blocks don't work. You can see a perfect example of the first time it came up to this area, it got hit right back down. So from February to now, it went down 38%, and it's only down 20% right now, only down 20%. So I wouldn't be surprised if when Dollar Tree got back up to this area, it had some overhead resistance. But when it's just a couple of days old like this, I don't worry too much about that. So Dollar Tree absolutely needs to be on your radar. 100%, you need to be taking a look and keeping Dollar Tree on your radar. Again, we don't have the bullish crossover yet on breadth. We don't have the bullish crossover yet on the fear and greed, but I can absolutely see that happening in the very near future if it just takes one red candle to totally spark this whole industry. And then lastly, Ollie's bargain outlet. I like to go shop there in Ollie's every once in a while. It's kind of fun. But this has been in a horrible, nasty downtrend for a long time. And this makes sense if you think about why it's been in this big, nasty downtrend, because who needs defensive stocks when you got tech, right? Who needs the staple sector when you got technology stocks that are printing money every day? And it got really, really, really fearful. But that fear has already started to evaporate and it's moving up towards greed. So looking at, this is actually in the discretionary sector inside of OVTLYR. But looking at this stock right here, we definitely want to keep an eye on Ollie's bargain as well. What did Ollie's do today? OLLI. A little bit right there, right? It wasn't a huge move, but again, I think these are three of the stocks that you need to keep your eye on. If just that fast with one stinking little bitty red candle, the market starts to shift. Now, let's take a look at the overall market. This is your OVTLYR after hours, where we break down what happened during today and give you some ideas for what's going to happen tomorrow. So the market had a slight pullback. It feels bigger than it was, but this is only a 72 basis point pullback here. We're crashing to levels not seen since last Thursday. We're crashing to levels not seen in an entire week. Yeah, okay. The NASDAQ also had a slight pullback today, but not enough to start this freight train. Remember, stonks only go up. The VIX went up ever so slightly. It's at 16 right now. VIX, you really don't need to worry about until it gets over 20. It's still in the base case level between 15 and 20, and that's where we're at today. But there were a couple things that caught my eye. One thing that caught my eye that I really want to take a look at with you is rates. Now, rates had been going up for a while and had a little pullback here. And now the 2-year, this is the top record up here, the top chart. This actually gets, this is pressuring the Fed to raise rates anytime the 2-year goes up. When the 10-year goes up, this puts pressure on the market. Anytime that the overnight rate, I'm sorry, not the overnight rate, the 10-year rate, when the 10-year rate goes up, that puts pressure on stocks because institutions look at this and they say, well, if we can get a risk-free rate that's even higher, maybe we should take our money out of the market and put it in risk-free rates. And this is also where a lot of borrowing costs are pegged to. So anytime the 10-year goes up, borrowing costs go up as well. But what caught my eye today that made me say, wait a minute, hold on just a cotton picking minute here, was the 2-10 spread. The difference between the 2-year and the 10-year has fallen a lot. Now, it may not look like much, but this level right here, this 46 basis point level between these two had been holding up for a while. And now we're down at 41 basis points. The closer this gets to zero, the more likely we are to see a recession. And this just broke to a new low here. So while individually, yes, these are pushing up, what's more important to me is the fact that the spread is breaking down. Now, again, we're still at 41 basis points. We got a ways to go, but the spread is not moving in the direction that you want to see. Speaking of moving in the direction of things you don't want to see, look at the risk on sectors today. I could not believe my eyes when I saw this. This is the tech sector up here, which has just only gone up for ages. The discretionary has been murdered. It's fallen off so hard. The communications sector, where Google, Netflix, and Meta live, has fallen off hard. The financial sector has fallen off not quite as hard, but that rotation is real right now. You are seeing this rotation in real time, and it's really great that you've subscribed. That way you can keep up with this and you can see it in real time with us. What about the risk-off sectors? What do you think is happening with those guys? I think it's taking far too long. There we go. What's happening with the risk-off sectors? They're starting to move. You got energy that's starting to move. You've got staples that has found a bottom right here, coincidentally, right at this order block. And then you've got utilities that sold off pretty hard, but is starting to make a comeback. Interesting notes, isn't it? Interesting notes. So what's my final scorecard of the day on the S&P 500? Well, choppy to neutral. Choppy to neutral. What's working right now is the fact that the market is still in a big, beautiful uptrend. What's working against it is the fact that rates are going up, and that spread between the two is not looking so great. The spread between the two is looking pretty bad. Now, we still have that buy signal in the S&P 500, but I wouldn't be surprised at all if this flipped to a sell signal soon. We got that sell off today on the market, and the fact that we've seen the fear and greed change dramatically over the last couple of weeks. Even with price going up, the greed has been coming out of it. And on the NASDAQ, similar story. The price has gone up, but greed has been going down. So just keep this in mind. I definitely think that we are on the horizon for a rotation in the very near future, and it looks like it's already started. But that's not going to stop Wall Street Bets. And I love to check in on Wall Street Bets because this tells me what's the popular stocks at the moment. Are these stocks also going to be rotating out? Well, a couple of these stocks we need to keep an eye on, like Marvell Technologies. Now, we did a whole video on Marvell just yesterday, I think, or was it this morning? Either way, we recently did a whole video on Marvell, and it just got a fresh buy signal. Jensen Huang thinks this is the next trillion-dollar company, and a lot of people are piling money into it as fast as they possibly can. Let's go take a look at Marvell, MRVL. A lot of people are piling money into it as fast as they possibly can, just on the fact that Jensen Huang said that this could be the next trillion-dollar company. And so today, it's gone up how much? With that buy signal that came through today, it's gone up about 3%. Now, 3% on a normal stock, hey, that's a pretty good day. 3% on another meme stock type craze stock, not so great. Not so great. So keep your eye on Marvell. It may not have enough juice to overcome the fact that the whole market's starting to rotate. And another one that we want to take a look at on here is Virgin Galactic. And I want to show you just how well outlier blocks work. So this buy signal came through on May 12th. I'm sorry, another one fresh in May 26th. May 26th had that buy signal and it rocketed, pun intended. What is this? Virgin Galactic absolutely rocketed straight into an order block. Rocketed, that was not it, not SPC, SPCE. There we go. Rocketed straight up into an order block and got monkey hammered right back down. This, my friends, is why order blocks matter. Now, granted, we did have enough buyers to push through these ones right here. But when it got to this point, when investors who had been stuck since October of 2024 finally got the opportunity to get out of break even, what do you think they did? That's exactly what order blocks represent, and they work. Okay. The buyers could not overwhelm the sellers here, and it got monkey hammered right back down. Space has fallen by, let's go from the peak to right now. It's fallen 53% in the span of a couple days. Yeah, great job over there, Ape Wisdom. Great job, Wall Street Bets. That's been a fantastic stock. And another one on this list, Palo Alto Networks. We had a huge move right here between April 23rd and May 29th, but that move is over, my friends. In fact, if we go to PanW, you'll see that was the move leading up into earnings, which is one of my all-time favorite trades to make. But now we're post earnings, and PanW is down 5.6% today. Is it over? Is it going to crash? I don't know about that, but I do know that we have an elevated level of risk right here, and it's a fantastic time to be taking profits. Now, we actually talked about this where Deutsche Bank says that there's been a huge stock market run up recently. And since World War II, there have only been a couple other times where it's moved like this. We did a whole video breakdown on that, and you want to check it out right here. Watch this video to learn more about what Deutsche Bank sees, and be sure you subscribe. I'll see you in the next video.